Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Thursday. In today's little program, I just want to do a quick recap of some recent US data we had released just about an hour and a half ago, and talk about why the market is sort of treading water a little bit, all up to a big event happening tomorrow. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. Hello again. Hey, hello again. So those of you who were kind enough to join me for the watch along of the US GDP about an hour and a half ago, we know they actually came in slightly better than anticipated. It was still a negative reading, but it was better than what the market was expecting, slightly better. It actually was announced at negative 0.6% versus the expectation of it negative 0.7%. Don't forget, the previous reading was negative 0.9%. So on one hand, it is slightly better than anticipated, but that is now 3 times the GDP is come in as a negative reading. I don't know if you remember, but we did the watch along of the US GDP, I think it was last month. Or it might have been 2 months ago. I can't remember. We've done quite a few watch-alongs. But we did it. And at the time of it was announced, the conversation was all about the market arguing whether or not the US was in a recession or not. Because technically, when you have 2 negative readings back to back, there of GDP, that is, then you are in a technical recession. And then obviously the market argued about it. It wasn't really a recession. The job data is too good, etc., etc., etc. That argument is not happening today. That argument is not even happening. Well, at the moment, that argument is not happening. Okay, there's no conversation or nobody, arguing about it. Because one of the reasons is those who say we're not, they always, hide behind job data. And we did have some good job data come in at the same time. US initial claims was announced 243,000 versus the expectation of 254,000. Now, don't forget, this number is the number of people for the first time per week signing on for unemployment benefit. So obviously, the lower the number, the less people you have signing on for unemployment benefit, which means, again, it's good for the labor market. So again, it's something else. They can argue that, look, we've had a good US initial claims, we're definitely not in recession. But look, the main reason why we're not having that debate like we did previously is because the market is transfixed with what is happening in Jackson Hole, the Jackson Hole Symposium. They are transfixed by this. More importantly, by what the Fed Chair J Powell is going to say tomorrow, and how hawkish he's going to be in his speech to indicate how aggressive the Fed could be in the future with interest rates. Now, like I say, Jackson Hole Symposium is now fully open. It's live. They're all getting together, obviously having dinner and drinks and discussing, economic topics. But we have had some conversations come out from Jackson Hole already from some other Fed members. And they are giving a little bit of mixed results, or mixed messages, shall I say? That's a better word, mixed messages. Now, Fed President of Kansas, Eva George, she has said it's too soon to predict how much US central banks would raise interest rates next month. So it's too soon to say if they're going to do 50 or 75. She also goes on to say, we are trying to get back to 2% inflation as quickly as we can without damaging without doing damage to the economy. That's quite dovish. That's bearing in mind is what the market was always scared of. The Fed was not going to care about economic data or about the economy. They were happy to push the economy into recession as long as they got inflation down to their target of 2%. So there it is. That's what she said. But she did add something else. She said, we have more work to do. So saying that we're not finished yet. And they have a lot more work to do. Okay, because don't forget their target's 2%, whereas US inflation at the moment. Yeah, well, another Fed official also came out today and he said something. He said, Chief Ralph Bosnick, he said he has not decided if the central bank should increase by 50 basic points or 75 basic points in September. So the jury's out. But quite a few members at the moment haven't really made a decision on where they're going to go with their rate hike in September. But because, like I say, excuse me, they do have a long way to go. Because they say their target is 2% and US inflation at the moment is 8.5%. Yeah, it's not as scary as the UK, obviously, but 8.5%. Okay, so it's still a long way off from their target. A long, long, long way off. So they still have an awful lot of work to do. But really, excuse me, it's all about the market's all transfixed and waiting really for what J Powell's going to do. There was a couple of things, where a lot of people thought that with, the reasonable US data we got an hour and a half ago, this could encourage him to be a bit more hawkish tomorrow. And we have seen a bit of mild dollar strength off the back of the data, mild, I would say. It wasn't dramatic because we have seen a little bit of slight dollar weakness since yesterday when there was a little bit of optimism has slipped back into the markets. We are seeing a little bit of mild dollar strength. We'll pull up the charts and have a look at the market in the moment. And of course, the question being asked is because yesterday in the US session, Wall Street, eventually it stopped its 3-day losing streak yesterday, again, on this optimism, because of those who joined me this morning. I mentioned that China is putting more stimulus into their economy to give it a bit of a boost, which has boosted optimism around the world. So that's the reason for that today. But like I say, anyway, let's have a quick look at the market, how it stands, this sort of mild dollar strength we are seeing slightly. Okay, so like I said, the euro, again, I say on the optimism, the early sessions, it had managed slightly to get back above parity. It managed to sort of tested through this key level of 1.00027. It's now still trading way pretty fair under parity now, trading at 0.99744. The sterling is the same story. Again, slightly better than the euro. It's still trading around 1.1817, but again, it's now getting around that level, that key level of area of interest, 1.1817. Dollar yen. Okay, dollar yen. Okay, it's fairly capped. It did have a little bit more of a slightly bullish momentum on the back of the data, but right now, like I say, it's pretty much capped around about 136.98. It's showing it's quite a potential key area of resistance at the moment. Currently trading at 136.77. Gold is pretty much the same story as well. Again, okay, it did have weakness against the dollar off the back of that GDP and US initial claims. Again, like I say, with that data, market thinking, Powell's going to be more aggressive now because that data is good. But since then, it's had a bit of selling, but it's still pretty much, it's under pressure really compared to the dollar. Currently trading at $1,755.25. S&P 500. Okay, yeah, I say you still managed to keep that slight optimism at the moment. Currently trading at 4,170 points. But we look at a bigger picture, look at on a daily, we can still see it still is capped currently at the moment by that key potential area of interest of 4,190 points. And that key potential area of interest is a potential support, 4,099 points. So it's still pretty much stuck between those two levels. So yeah, that's how it stands at the moment. But like I say, really, the market is sort of trading water a little bit at the moment, because I really think it's they're waiting to see what Jerome Powell will do tomorrow. It's going to be interesting because his speech last year was very dovish. He was very optimistic about taming price rises. He was talking about the job market again as well. because it was obviously recovering from the sort of the COVID lows, or the lockdown lows. So this time it's going to be quite interesting to see how much different he's going to be on the back of that. But we're going to talk a bit more about that tomorrow as we get closer to his speech. So we'll talk a little bit more and dissect that, maybe do a couple of scenarios, what he might say and what could potentially affect the market. So we'll do that tomorrow. Don't forget, like I say, so yeah, basically tomorrow is the main thing. Rest of Jackson Hole Symposium, it started now. Let's see what J Powell's speech is. And the market, as it currently stands, slightly higher, 0.31% on the FTSE, DAX trading 0.13%, US Top 50 currently trading at 0.54%. So don't forget, you can talk to me or ask me questions anytime you wish, or just simply say hello if you like. Don't be shy. Give it a try. Okay, well, not a problem. Don't forget, if you think of a question later, you can put it in the comments section on either Facebook and YouTube, and I will see it and I will reply to it next time I'm going live, which will be, of course, tomorrow, which I'll be back on tomorrow again at 8 a.m. UTC. Let's see if we get any more speeches from any other Fed members tonight, which could impact the market. So that'd be interesting to see. And also see how Europe is started on Friday. If we can have a dramatic Friday like we did last week, or we'll have a bit of a sleepy Friday till J Powell sleeps. So that'd be interesting to see. And again, obviously, I'll be back on again tomorrow afternoon at 2 p.m. UTC to cover the US session. And like I say, we'll talk a little bit more about Powell's speech, possibly look at some potential scenarios of what he could possibly see. If there is no questions, don't worry, or not to worry. If you're watching me on Facebook and you've enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little episode, subscribe if you like. Hit a notification button so you know next time I'm going live. If you enjoyed this video and you found it useful and you put up with me, my over-the-top enthusiasm for the market, which I just simply cannot help, give me one of those. It's nice to know that you like what I do. I can see I've got a couple of likes already, which I really appreciate it. And the same as I really appreciate you guys come along to watch me all the time. I really appreciate that too. I really do. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever ever should be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.